A general journal is an accounting book used to record adjusting entries, errors, as well as omission done while posting subsidiary journals into the general ledger. The preparation of this journal tests your knowledge on the accounting equation, the application of the double entry system, and the use of contra accounts. The entries into the journals are generated by the use of a source document called journal voucher. Note that narrations forms an integral part of a general journal. A narration is a brief summary of the transactions that has been captured. It must be shown as a concluding statement at the end of every entry recorded. On the accounting cycle, before commencing with stage 4, which is the preparation of a trial balance, certain accounts need to be reviewed and reconciled, especially those dealing with external party transactions. Such accounts are the bank account, where receipts and payments were recorded that involved the financial institutions. The accounts receivable, where transactions affecting debtors were recorded. The accounts payable, which recorded transactions affecting the creditors. Such errors and omission will require the preparation of a general journal to adjust these general ledger accounts. After these corrections, the trial balance will be prepared, then followed by the financial statements. This is an illustration of a general journal when dealing with the books of a vendor, an entity registered for VAT. The layout is different from a general ledger, though the parameters are the same. The first column is the date column, followed by the details column, then the debit column, and the credit column. The same rules of double entry and contra accounts will apply as we have used them in the preparation of the general ledger. Looking at a fundamental element of the accounting equation. If assets were bought on account, but then omitted from the accounts payable journal, the entries that will be made in the general journal are the following. The asset account will be debited if it's a qualifying expenditure. Input VAT will be determined. The input VAT will be debited in the SARS VAT account, while the accounts payable will be credited with the amount including VAT. The narration will read as a purchase invoice omitted from books. For the equity accounts, if we are dealing with an untraceable or insolvent debtor, the balance owed should be written off as irrecoverable. An expense account will be created in our books called credit loss. The credit loss account will then be debited as an expense with the amount excluding VAT. The VAT calculated on the credit loss will be debited to SARS VAT account. The accounts receivable will be credited with the amount including VAT. The narration will be bad debt written off. Why are we including VAT in this transaction? It's because initially, when the credit sales were recorded in the accounts receivable journal, output VAT was recognized. This output VAT is also included in the amount that will not be recovered. Therefore, we have to reverse it from the VAT account. The next transaction is where the owner withdraws goods for personal use. The drawings account will be debited. The trading inventory will be credited with the cost price. If the selling price is given, we will have to use the perpetual inventory system method to arrive at the cost price. Then this will be at the amount that will be credited against the inventory account. We will have to calculate the input VAT for this entry, credit the SARS VAT account with the amount that has been calculated, so that the drawings account includes the VAT. Then the narration will be drawings for personal use. In this line transaction, we are including VAT because the owner has become a consumer. Therefore, he becomes liable for the input VAT. He cannot claim it from SARS. For the accounts affecting liabilities, where a creditor charges interest on overdue account, the interest charged as an expense will be debited, the accounts payable credited with the interest, and the narration will read as interest charged on overdue account. Please note that accounts that are credited in the general journal, all of them are written away from the margin. When processing entries into the books of a non-vendor, VAT is ignored. In recording assets which were bought on account, which were omitted from the books, asset account will be debited, accounts payable credited, narration, a purchase invoice omitted from the books. Where we are incurring an expense because we are writing off untraceable or an insolvent debtor, then the credit loss as an expense will be debited, the accounts receivable credited, narration, bad debt written off. For drawings for personal use, drawings account will be debited at cost, while trading inventory will be credited at cost. Narration, drawings for personal use. Please note that in all of these cases, VAT was ignored because we are dealing with the books of a non-vendor. When incurring liabilities for overdue account, interest charged as an expense account will be debited, accounts payable credited, the narration, interest charged on overdue account. Let's work on the following example. All the transactions for June 2019 were recorded in the appropriate journals of Liverpool Trader. The trader uses a perpetual inventory system. Goods are marked at 30% on selling price. The following transactions occurred on the 30th of June 2019 and must be recorded in the general journal. VAT of 15% is included in all transactions where applicable. Do your calculations to the nearest £1. Line transaction 10. The owner took inventory with a cost price of 1,542 for own use. Inventory account will be credited at cost price 1,542. VAT will be calculated on the amount and credited to the SARS VAT account. The VAT calculated is 231 Rand. It will be added to the cost price to arrive at the debit entry in the drawings account of 1,773 Rand. The narration will be shown as drawings for personal use. Line transaction 14. The owner withdrew inventory at selling price of 2,300 excluding VAT for private use. The trading inventory will be recorded at cost price on the credit side, calculated on the markup of 30% on selling price as 1,610. The VAT calculated on this amount will be credited to SARS VAT account as 242 rand. This VAT will be added to the cost to arrive at the total debit for drawings account of 1,852. The narration will be drawings for personal use. Transaction 17. A trade discount of 650 rand given to a debtor as SARS was not deducted. The cash discount account will be debited with 565, which is the amount excluding VAT. The SARS VAT account will be debited with the VAT calculated on the amount of 85. The accounts receivable will be credited with the full amount of the trade discount, 650. Narration will read as cash discount erroneously added in the invoice. Line transaction 19. An amount of 513 rand was received from a debtor, C. Kathleen, whose debt was written off as irrecoverable. The entry was made in the cash receipt journal but posted to the credit side of his account. The entry in the cash receipt journal is correct, but posting to the credit side of the accounts receivable, it's an error. The amount must be reversed and credited to the correct account. When the debtor settles an account which was previously written off as irrecoverable, the entry should be recorded in an income account called credit loss recovered. Therefore, the entry will be reversed by debiting the accounts receivable with a full amount of 513, credit the credit loss recovered income account with the amount excluding VAT, calculate the VAT included in the amount, credit it to SARS VAT account. The narration will read as correction of posting error. We calculated VAT for this transaction because at the initial stage, when the trader sold goods to the debtor, we recognized the output VAT in the accounts receivable journal. Therefore, this receipt will include VAT. Transaction 20. A credit note of 600 rand was issued to C. Sydney in respect of goods returned by him. No entry has been made. In other words, this credit note was not recorded in the accounts receivable allowances journal. To bring it into books, we will use the same accounts that would have been used or shown in the accounts receivable allowances journal. The debtor's allowance account will be debited with the amount excluding VAT. SARS VAT account will be debited with the VAT which was included in the returns. The accounts receivable will be credited with the full amount. The narration, credit note omitted. Now remember that now the trader uses a perpetual inventory system. Goods are marked at 30% on selling price. We will therefore have to determine the cost of sales for the goods that were returned. We will therefore debit the trading inventory with the cost of goods as calculated using the markup. Credit the cost of sales as a contra account with the total amount calculated. Show the narration as credit note omitted from the books. Transaction 23. A creditor, B. Baker, whose account of 7,840 rand is overdue, charged an interest of 3%. We will debit the interest charged with the 3% of 7,840, calculated as 235. Credit the accounts payable with 235. Show the narration as interest of 3% charged on overdue account. For line transaction 24, a debtor, K. Corey, with a debt of 1,500 was declared insolvent. His estate paid 45 cents in every 1 rand owing. The receipt was recorded in the cash receipt journal, but the balance owing must be written off as irrecoverable. From K. Corey as a debtor, we didn't receive the full payment of his debt. We only received 45 cents in every 1 rand that he was owing. In other words, we have received 1,500 times 45 cents, which is 675 rand. This is the amount that was recorded in the cash receipt journal. The balance of 825 rand must be written off as irrecoverable. We will therefore debit the credit loss with the amount excluding VAT, 717. Debit SARS with the VAT that is included in the losses, which is 108 rand. Credit the accounts receivable with the full amount of 825. Show the narration as credit losses written off. The last transaction, a check receipt of 2,500 rand from a debtor in settlement of his account of 2,700 rand was returned by the bank due to insufficient funds in his account. The RD check was reversed in the books, but the discount allowed has not been cancelled. As you can see, the debtor owed 2,700 rand. The business received 2,500 as a payment after allowing the discount of 200 rand. The 2,500 rand as an RD check was cancelled and reversed in the accounting records, except for the discount allowed of this transaction. Therefore, to reverse the discount allowed, the accounts receivable will be debited with the full amount of 200 rand. The discount allowed will be credited to cancel the entry by 174 rand. The VAT included in the discount will also be cancelled with a credit in the SARS VAT account of 26 rand. The narration will read as reversal of discount on the RD check. After completing the general journal, entries must be posted into the general ledger. I have selected the accounts receivable to demonstrate the posting. If you look at the accounts receivable on the debit side, I have recorded the opening balance of this account at the beginning of the month. At the end of the month, I recorded the total sales, which were posted from the accounts receivable journal. These represent the total sales for the month. On the credit side, I have recorded at the end of the month the entries posted from the cash receipt journal. This entry from the cash receipt journal represent the receipts received from debtors. I have also recorded on the credit side the total returns that were posted from the accounts receivable allowances journal. If you look in the general journal, I have only selected the entries that has affected the accounts receivable. This first entry was the entry that dealt with a credit note which was omitted for goods that were returned by the debtor. With this entry, we debited the debtor's allowance and the SARS VAT account, while the accounts receivable was credited. We carry over that credit to the general ledger in the accounts receivable. We will show it under details at the end of the month as sundry accounts, and the total entry from the general journal 600. I have written the sundry accounts. You can write the total returns. The next entry is the entry that dealt with the reversal of the discount on the RD check. In this transaction, we said the accounts receivable will be debited while the discount allowed and the SARS VAT account will be credited. Therefore, at the end of the month, we go to the debit side of the accounts receivable according to the general journal entry. We will also record it as sundry accounts because it represents two accounts that must be credited. The entry is recorded in the general journal under the folio. The total amount is 200. When all entries have been recorded in the accounts receivable, we will then have to balance and close off the account by determining the closing balance, which will represent the opening balance for the following month. We will therefore balance it off by calculating the total for both sides using the highest value to balance off the accounts. In this case, the debit total is the highest value. We will then calculate it, carry it over to the credit side, balance the credit side with a missing figure, reflect it as the closing balance carried down, which will be shown on the opposite side at the beginning of the following month, shown as opening balance brought down, the amount as calculated on the credit side. Test your knowledge with these few line transactions. VAT of 15% is applicable for qualifying income and expenditures. 16 marks is allocated. If narrations are not shown, negative marking will apply.